you shouldn't look at the chart as how it relates to the time frame. It doesn't matter if this is daily or 5-minute bars, doesn't matter at all. They're all traded the same. I think to be successful, the only trade that you have to look at is to look for second legs. Because I've done this study and I know that there is more than 90% chance for it. That's the highest probability trade that we have in price action trading.
I only have one question. Oh, sorry.
Yeah, sure.
I was fascinated. You know, you hear I'll talk about second legs, and when I saw y'all's podcast on second legs, I started just even looking at breakouts, a reasonable breakout bar. And what I noticed was, and everyone kind of knows this, you could almost get out break even if the next bar was a bad follow through bar, whether or not you scaled in a little bit lower or just got out.
Yeah.
And it was honestly fascinating.
Yeah, that's the highest probability trade that we have. I was not able to find anything with higher probability than second legs.
So that's your favorite by default?
Yeah, so that's why I programmed this, because that's what this does, breakout detector. This is designed for second leg trading. I did a very detailed study on this algorithm, very, very detailed. And the probabilities are staggering. I mean, it's just crazy. This is the other code that's taking so much time to compute. So what's that? This is, oh, that's Forex, okay. So let me get rid of this one and talk about this a little bit more. That other code is very computationally intensive, takes a lot of time to calculate. But this one does not. So if I go to ES, Globex, or day session even, day session, and 5-minute bars. So look at this chart from a second leg point of view, right? We have this big bull bar fails, right? You expect this to fail because fourth push up, right? But it still allowed you to exit break even. So if you buy here, that's a stupid trade, by the way. But had we bought here, could have exited. There were two other opportunities to exit, this bar and next one. So reversal followed through big bars. And this is very common. So you start to get a pullback, and the pullback is painted. So this needs a second leg, this one or this one, but this needs a second leg too. And because of that, this is probably not the second leg for this leg down. This is just a pullback from the reversal up. And then this or the next one is the second leg. Because you know that one of the things that you need is symmetry, right? So two legs are approximately the same size. This happens all the time. Sometimes you don't get it. Sometimes the second leg is really small. But most of the time, they are symmetrical. This one didn't reach quite up there, but it's big enough to be close to symmetrical. This is what I look for every day, second legs. But I look for them in the context of my algorithms, obviously. But that's the core of my trading, because I was not able to find anything of higher probability. And seriously, you don't need anything more. Like, look at any chart, right? One leg down, second leg down. Now, if you take all of this as one leg, small second leg down. 4 bars down, small second leg down. Small. This is not symmetrical, but there is still a scalp here. This is a special case because there are 2 attempts to reverse, and this is at resistance. So this is an exception. Again, 2 good bars, pause, second leg down. Tight channel, right? Pause, second leg down. Small second leg, but second leg down. Reversal up, 2 good bars, pause, second leg up. Right? count these trades on this day and see how much would have you lost and how much you would have won. It's just hands down winners. And look at this one, another day. This is second leg. So green bar, pause, second leg up. And there is actually a third leg, but the third leg failed. That's the tail of this bar. Down, pause, down. Up to this point, macro channel, second leg down, reversal. Up, pause, second leg up. Yeah, so I honestly wouldn't do anything else. Like all the intelligence out there to all the little stuff, pay attention to 100 small things. I don't think you need it. I think all that you need to do all day long is just to look for second legs and disqualify the questionable ones. If they are questionable for any reason, just ignore them. Have you seen the movie Heat?
I've heard it. Is it a pretty recent movie? Like a year or two?
No, not really, 90s. So it's Robert De Niro and Al Pacino.
It's been a minute.
Remember Jimmy McElwain on the yard used to say, you want to be making moves on the street, have no attachments, allow nothing to be in your life that you cannot walk out on in 30 seconds flat if you spot the heat around the corner. Remember that? You see me doing thrill-seeker liquor store holdups with a Born to Lose tattoo on my chest?
No, I do not.
Right. I am never going back.
Then don't take down scores.
I do what I do best. I take scores. Guy told me one time, don't let yourself get attached to anything you are not willing to walk out on in 30 seconds flat if you feel the heat around the corner.
So then if you spot me coming around that corner, you're just gonna walk out on this woman? Not say goodbye?
That's the discipline.
That's pretty vacant, no?
Yeah, it is what it is.
Robert De Niro is the gang leader of a gang of thieves. And he says that I learned from my mentor that if you feel the heat around the corner, you have no attachments to your robbery or to anybody or anything. You just fly off. You just disappear. That's the kind of mentality with respect to second leg trading. If you feel the heat, just ignore it. For example, these 3-4 bars up. It's already leg 3 up. So 1 big leg, 2, 3. There is some heat around this. Ignore, don't buy. The slightest thing that doesn't quite sit well with you, you just say, I don't know. I'm going to wait. Or this one. Red bar right on the moving average. It's dangerous. It might take off and go up there. So, I don't know. I would not buy this one. Do you know why? Can you say why?
It could be a wedge bottom. Or you said you would not buy it or you would not sell it?
I wouldn't buy it, I wouldn't sell it. So this is an ignore in my case. But why? So that's one. So 3 legs, 3 pushes down.
And then you could get a bear breakout below a bull flag?
The most important reason is that if you look at this leg up, this macro channel, this is a little triangle here, right? So we get range compression and breakout.
Mm-hmm.
There is a target. It's either this low or that high or this high. Obviously, you don't know how far the market is going to test, but there are 3 prices here that seem to be important prices to test. This bar, because it's a bad buy is the highs of these bars. If they get breakout, they are magnets and they will be tested. This is the breakout point. Odds are it could be tested. This is a wedge. Market usually goes back and tests 1 or 2 ticks below the low of the last leg, and this is the last leg. So if I buy here, market can easily test below this bar all the way down to here. And it tried to get close, but couldn't. So that's one of the ignore situations. This is the little stuff. So the more of this you can see in real time, the easier trading becomes. But apart from that, you know, second legs all day long. On this day, 1, 2. This one is 3 legs down, so I would sell this one. 3, 4. That's an ignore. 5, 6. 6 trades.